Hey, welcome back. It's Jason Walter here. Well, the winding down of the Mortgage Loan Forbearance Program caused a huge increase of the number of houses for sale in the US. In today's video, I'm going to be answering this question and also responding to a news article that said a major shakeup is headed in the US housing market due to people ending their forbearance plans. This news article was sent from my friend and fellow YouTuber, Christina Smallhorn. This news article has been getting a lot of attention, and in my opinion, there's a lot of misinformation in here, so let's go ahead and dive right in. It states at the height of this pandemic, more than 7.2 million homeowners were in the Mortgage Forbearance Program, which allows some borrowers to pause their payments. The economy has since posted one of its fastest recoveries in history. Now just 1.7 million borrowers are enrolled in the forbearance program, but soon it will be zero. Okay, first of all, there's not going to be zero anytime soon. In addition to that, at the height of this pandemic, there was never a time that we had 7.2 million homeowners in forbearance. That is flat out wrong. So for example, when you go to Black Knight's website, at the peak, there was less than 5 million people in forbearance, and that was back in May of 2020. In addition, technically right now there's 1.6 million people in forbearance, but at the time of this article was written, there actually was 1.7 million people currently in forbearance. It goes on to say the Biden-Harris administration has made it clear it has no plans for another extension of the mortgage forbearance program, which is set to lapse on September 30th. Borrowers won't all get removed at once. Instead, they'll be phased out over a period of several months. This article makes it sound like the forbearance program is set to expire on September 30th, and that's simply not true. Instead, the September 30th deadline is really the deadline to request an initial 12-month forbearance period if you have a loan that's backed by FHA, VA, or USDA. In fact, don't take my word for it. Let's have a look at the Consumer Financial Protection Bureau's website, or the CFPB, which is a government website. It says if your loan is backed by HUD, FHA, USDA, or VA, the deadline for requesting an initial forbearance plan is September 30th, 2021. In other words, these homeowners with these types of loans have until September 30th to request a forbearance plan if they haven't already entered into one yet. That means that someone who has an FHA, a VA, or a USDA loan who has a financial hardship can contact their loan servicer, which is the company they pay their mortgage payments to, on September 29th and get a 12-month forbearance plan if they do have a financial hardship. In addition, here's a key point here, because for homeowners with mortgage loans backed by Fannie Mae or Freddie Mac, which are commonly referred to as the enterprises, there is still no deadline for requesting an initial forbearance plan. And according to the Federal Housing Finance Agency, which regulates the enterprises, approximately 62% of all new mortgages were acquired by the enterprises. So in other words, the forbearance plan is not going to be going away for at least another year, not September 30th like this article alluded to. This article from Yahoo Finance went on to say the following: nonetheless, as Fortune has previously reported, this is a major shakeup headed for the housing market. In a nation of more than 80 million homeowners, 1.6 million might not sound like a lot until you consider there are just over 600,000 houses for sale right now on Realtor.com. In fact, this year housing inventory hit a 40-year low. So even if a small percentage of these 1.7 million struggling homeowners opt to sell their houses rather than returning to their monthly mortgage payments, it could cause a shock in the housing market. Let's first talk about these 600,000 houses for sale on Realtor.com, and then let's discuss what potential impact these remaining 1.6 million people in forbearance could have on our housing market. First of all, if you click on this link in this article, it takes you to this website on Realtor.com. If you scroll down to Inventory Monthly and click on this link, it shows you that there are 640,716 homes as the active listing count, or the total amount of housing inventory as of the end of August 2021. However, what I found to be very strange is that 640,000 houses currently for sale, at least as the end of August, seems very, very low to me, and it should be much higher than that. So I did some digging for you guys, so check this out. Here's total housing inventory on Fred's website. The source of this is the National Association of Realtors, as you can see below this graphic. So when looking at this, inventory has been above 1 million homes for at least the last 12 months. In fact, as of July 2021, there were 1.32 million homes for sale, according to the National Association of Realtors. And by the way, the stats for August have not been released yet. Typically, there's a 3-week lag of when they report the previous month's stats. In contrast, when you look at housing inventory per Realtor.com for the year, housing inventory is well below 1 million each month. For July 2021, there were just over 606,000 houses for sale per Realtor.com. So depending on which data source you look at, the range of the number of houses for sale in the US could be 640,000 or it could be 1.32 million houses for sale. Due to this very big difference, I'm guessing that Realtor.com uses a smaller sample size than the National Association of Realtors. But at the time of this video, Realtor.com has not replied to my email with this question. So going back to this news article, will these 1.6 million homeowners who end their forbearance plan, will they cause a housing market crash when they end their forbearance plan? In my opinion, there's very little chance of this happening, and here's why. According to data analytics firm Black Knight, 7.3 million homeowners have been in forbearance at some point since the onset of this pandemic. Now there are 1.6 million who remain in mortgage loan forbearance. And by my dumb math, that means there's 5.7 million who have ended their forbearance plans so far. And what has happened to home prices over the past year? Well, the answer is home prices has soared 18%. In addition, if we look at the number of homeowners who have either sold their houses or defaulted on their mortgages after ending their forbearance programs, the numbers are very, very small. This is from the Mortgage Bankers Association, or the MBA. So out of all the people who have ended their forbearances so far, only 7.4% either sold their houses or refied their mortgages. And only 1.4% result in repayment plans, short sales, deeds in lieu of foreclosures, or other reasons. In fact, the majority of the people who have ended their forbearance plans so far did a loan deferral or a partial claim in which all their missed mortgage payments are added to the back end of their loan. In other words, their loan payment remains exactly the same, but their term of the mortgage just gets extended in order to pay off all those missed payments. In addition, approximately 22% represented borrowers who continue to make their monthly mortgage payments during their forbearance program, even though they were not required to. In addition to this, about 13% result in reinstatements in which all their missed mortgage payments were paid to the lender by the homeowner as a one-time lump sum payment. Therefore, if history repeats itself, the remaining 1.6 million homeowners who are currently in forbearance will opt to do a loan deferral or a partial claim, and a very small fraction will either do a refi or sell their houses. And because these homeowners entered into forbearance at different times, this also means that the vast majority of people will end their forbearance programs at different times as well. In other words, it's very unlikely that these people will end their forbearance programs over the next several months, like this article alluded to. Even with the recent expiration of the foreclosure moratorium, these forbearances are very unlikely to cause an impact on our housing market. In addition to this, because home prices have shot up over the past year and a half, this has also caused home equity, or people's equity in their houses, to increase as well. I noticed that Black Knight posted last week that the vast majority of people in forbearance have equity in their houses. So they reported that 98% of borrowers in active forbearance have at least 10% equity in their houses. When you compare that to the Great Recession, only 40% of all mortgage holders had less than 10% equity, with 28% fully underwater during the Great Recession. In addition, there's been speculation that a lot of people are going to get foreclosed on because they are missing their mortgage payments, but some of them are not paying their property taxes and insurance. And Black Knight had this to say: even when adding 18 months of deferred principal, interest, taxes, and insurance payments onto the total debt amount, only 7% of borrowers in forbearance would have less than 10% equity in their houses. Therefore, one would assume that these folks who have at least 10% equity in their houses would have the ability to sell their houses and still have money left over to pay all their closing costs. If you want to know about all the options you have after you end your mortgage loan forbearance program, then you want to check out this video right here, because in that video, I discuss all the options that homeowners have in order to pay back all their missed mortgage payments. Hope you have an awesome day. Look forward to seeing you on that video.